So welcome, Dhiraj, Kamlesh, Arindam. I think these are very interesting times as far as e-broking is concerned, and the economy is doing well. There's a lot of interest in the market. Customers, clients who've been sitting on the fringe for quite some time are now actually investing and seeing some returns. And of course, this whole new wave of digitization, starting from demonetization and all kinds of changes in the payment side, it all augurs well for business like e-broking. Of course, and the truth is that in the last 6-7 years, as I was looking at the data, the internet-based volumes have actually doubled. On NSE specifically, as mentioned, I think it'll be the same in BSE also. So let me start with you, Dhiraj, on these changes which are happening and the infrastructure which has already got built. What do you think has been the catalyst in bringing customers on the platforms and on investing into equity markets? And where do you think are the changes required today to continue this growth and continue this journey?
So first of all, I think we've seen that there are more interest on the equity as a segment. Secondly, assimilation of technology. So we've seen that over the years, Indians have assimilated technology and they've started to use the smartphones and desktop more often. And it came as an easy option for us to build the platform for our customers to ensure that they are able to leverage and they get convenience of trading at their fingertips or investing at their fingertips. So basically, it was a natural progression in the sense that the assimilation of technology is happening to leverage it. What we have seen that, the brokerage houses were not able to serve the entire length and breadth of the country. So particularly in the smaller towns, tier 3, tier 4 towns, they were looking at more sophisticated tools to understand the market, to get more information, to basically analyze the information better and take more informed decisions. And that's where, from one-to-one conversations to a personalized tools which can give them handy information to take their investment decision, help them to achieve their goals. That's where we've all leveraged the technology. In terms of a future for the technology, I think we've just worked on the convenience piece, cut our cost, but now we are going to take leap, and all of us are in the process of working on the technology to ensure that we really able to give personalized help to our customers so that they can take more informed decisions. So we are looking at leveraging various tools like artificial intelligence, chatbots, and machine learning to ensure that they get the right kind of information and advice from us.
Kamlesh, what are your thoughts on and expectations from the regulatory framework to accelerate this growth in e-broking business?
If you look at, for example, you're talking about numbers, you're looking at data, and actually, if you look at the volume which happens on mobile, it's actually doubled in the last 1 year itself. If you look at the last 4 quarters, then the largest growth has happened on the online segment, web and mobile. Offline is largely flattish, but still controls about 70% of the market. I don't think the regulation constraint in India is not so much on what we can do with getting more customers in. I think the bigger problem in India today is the base of the capital market. Yeah? So in a population of 130 crores, if you have only 2.5 crore demat accounts, then that's one big issue. And I always wish, like there was a Jan Dhan Yojana at some point of time which got bank accounts, if there is something similar on demat accounts, I think it can make a big difference. We can call it from the regulation or from the government, because remember that demat account is the most important item required for somebody to get into the capital markets. And if you don't have a demat account, life stops there. Secondly, we've been talking to regulators to see whether can we make the process simple. Okay? For example, if you have a bank account and you want to open a demat account, why make it complicated? Yeah, you have a bank account, maybe just give a cross check. Your KYC is done, you can get a bank verification done from the banker. If there are methods which actually allow ease to get people more into demat account, and I think the business of internet will automatically grow. Because in India, whilst you are all very happy about the fact that we will get to whatever 40 crore and this will become 80 crore internet users, our biggest worry has been that in India the bigger problem is only 1 out of 5 internet people actually use the internet to buy something. And there's no point in having 40 million people or 40 crore people if only 1/5 of them actually buy something. What needs to be done is making sure that the consumption happens, and there's very good data on what's happening on banking in terms of transactions. So I think the regulator makes it easier for getting more people on the account. Digital account opening process can be made simpler, quicker, faster. I think this business requires more people to come into the net before we look at how it can expand exponentially.
Kamlesh, carrying on the same thoughts, I think Kotak Securities has very, what I should say, loyal set of customers, especially on the HNI segment. And those customers are used to, getting a call from their relationship manager, advising them, etc. But here is almost like a competition, which is the e-broking. So how do you see the customers' expectations vis-a-vis having a relationship management, or are they, what are the trends? Are they liking to do it themselves?
Sure. Yeah, I spend a lot of time in the investing world, and I keep telling people internally that in today's world, having customers' loyalty is a very big thing. Okay. And remember, if you are in the offline world, the customer at least will call you and say, "I'm going."
Yeah.
In the online world, he doesn't even have to tell you that he's going. He can just go, and you wouldn't even know about it. In the investing world, the other issue is that whenever a customer makes money in India, specifically, maybe anywhere across the world, he always thinks it's because of him, and when he loses money, it's always because of his advisor. And you can't change that. I mean, there's no point in trying and changing that. But the big thing that's happening, which I noticed today, is advice is shifting to information. So a lot of people, whether it's HNI, not HNI, and that's mirroring from what's happening in the actual online world. If you look at online shopping today, which is a very large part of the consumption, people want to compare, look at what's good, look at the price points, look at what people are talking about the brand, and then they consume. Yeah. I think the financial world is also moving to that area. It's saying, don't tell me what to buy. Give me all the information in one place, and I will then evaluate all the information and decide. And that in the investing world is a very good movement away. So it's not about HNI customers wanting to remain offline or wanting to speak to the dealer. We're now seeing a trend where the movement to the online world is happening very, very seamlessly. These guys are doing their banking transactions online, so it becomes easier to do even broking transactions online. But the big shift we think is advice is actually shifting to information. So the better guys, if they provide information, is a better format, clutter-free format, and allow the customer to then decide what he wants to do. I think that's where the world is going to move to.
Yeah, I agree. I think today when we come out of a doctor's appointment, first thing we check is whether he's prescribed the right medicine. And the same thing is happening here also. And I think, one thing that I would like to pick up here is that the movement towards rationality, I think it's a movement towards rationality where you're looking at far more number of variables before you take a decision. So it's always going to be good for clients also. Arindam, on to you. One of the issues that online businesses face, taking a leaf from what Kamlesh said, is the loyalty is always questioned. So people are always looking for better deal. They're looking for better price. And, the barriers are far lower today as compared to what they were previously. So what are your thoughts around this? How do companies, e-broking companies or e-commerce businesses really build that loyalty with their customers?
See, it's a big challenge now. You are getting accounts where maybe there is no physical interaction, and a person has come and opened an account and he's transacting. A lot of time, you only know very few of the preferences that he has, right? Now, to understand him in a deep fashion, you have to go beyond. You have to understand the behavioral part of it. You want to know that exactly what are the objectives. Because when a new client comes in, it is also very difficult to have a very clear objective defined by him. A lot of times, we have seen that there is a conflicting set of short-term and long-term objectives. So which create a very nebulous environment in a sense, that you don't get to know exactly what he wants, right? Now, there is the first part. And the second part is that in online, whether be it broking or be it banking or be it anything, generally, the loyalty factor is very, very low. I was going through a study in the US when question was asked to internet customers that how often you would change your bank account if you get a better offer. And 35% people responded saying that instantly. And 35%, they said within 3 months also, they are ready to look at changing bank account. How many people change bank account? And here we are talking about broking. Broking is clearly related with your return, with the dynamics of the market, and so many other nuances, which is far, far more complex than a banking environment. So it's a big challenge. Secondly, you have seen that broking is largely very, very fragmented. Be it Indian market, be it US market, everywhere, each broker has a different set of price offering to the customers. So distinctly, these particular segments may overlap or may undercut in a way without giving you any clue. So when discount brokerages came, let's say 2.5 years back, there was a huge pressure on almost every full service broking company to retain their client base. And they have succeeded in that because if you look at the last 2 years' result, the revenues from the top 5 to 6 broking companies have gone up by 22% CAGR, right? Which is a big number. And even today, the volumes and the activation, both counts, the top rung brokers have done fairly well in the last 2 years compared to any other segment. A lot of numbers are not available for the discount brokers who have been there in the market for the last 2.5 years. But I'll come back to the point that, so there are pretty much a challenging environment where you do not have a direct control. The only thing that you can do best to protect is to understand your customer. So even in our company, what we do, we start with a small survey when a customer comes in to understand. And going through each level of transaction, we try to connect with him and understand him and all his objectives well. Recently, we have done a survey, and we found out that a lot of customers think that even if they have a RM, the RM do not understand that what is the objective that the client has in mind. There is a communication gap. So we started doing an interactive charting facility whereby RM and client both can jointly develop a roadmap so to stick to the objectives. So be it pricing, be it technology, be it the hindrance where you are not able to reach him physically, all make the environment challenging. But once you do your analysis properly, you develop a tool, as Kamlesh was talking about, AI and other stuff, big data, then I think there would be a lot of tools through which we can retain customers and even grow beyond.
All right. Dhiraj, you've been a banker and then you've seen the offline world where, there's so much, when a customer walks in, I always wondered how patiently they wait for 20 minutes in a queue to take out cash and they appreciate. Whereas online, if you're not, instant, you're not responding to him instantly, he's very unhappy. How do you build that value? I mean, how do you make him see that value that, just to quote, a few years back, one of our customers came to our office and he was quite surprised that ours is such a large office. I think what he expected was one server and a lot of wires around, etc. So how do you, kind of show that value to the customer that there's a lot of hard work which is going in and it sometimes gets kind of behind the curtain?
So I think the most important thing is that how do you stay relevant to your customers?
Absolutely.
I think that's very, very critical. So whether in terms of servicing it offline or online, what kind of experience you are giving to your customers and what are their expectations? When they come to a brick and mortar channel, they come with a different expectations. They expect different service standards. When they are on the online world, they not only compare you with the other competitors, they also compare you with the different industries as well. Whether it is in terms of the experience with the Uber they get, or they get in the e-commerce space and so on. So the being relevant for the customer in the online space is actually more challenging than in the offline space. How do you do that? I think you have to every time ensure that you have tools to engage with the customer properly. Like Arindam said that, the RMs still do not understand their exact goals or requirement despite the fact that they have been engaging with them regularly, because the need and the requirements at the customer levels are also changing fast, and they are changing significantly. In that process, you have to analyze their behavior, analyze their moves, and accordingly present yourself and keep changing so that you can really are meaningful for your customers. So I think that's where we have a huge challenge. And my take is that innovation in that space is something within the organizations is difficult. That's where you have to partner with the fintechs and niche players to understand that, solve particular problem, get the work in an open API kind of a economy and get the relevant solution, plug that solution with your overall platform and see that, they see a value addition from your side.
Kamlesh, your thoughts on this?
Actually the amount of information that you can get in the offline world is far more limited than what you can get in the online world. So if you have your intelligence right, actually the amount of information that you can get on the online world is actually significantly higher than the offline world. Now we often wonder if Facebook decides to start a bank, and that's where competition could come from. I mean, the amount of customer information he has, I don't think there's any other firm in the world which has that kind of information. I mean, I see a lot of them except for, every time in the day where you are, you want to announce it on Facebook, whether you're at the airport or whether you're any other place. And so the kind of information, your likes, dislikes, what you like, who your friends are, you want to be on Twitter to say what went right, what went wrong. Now, these are the firms which actually have a wealth of customer information. Absolutely. I think the learning is from there to say, on your online platform, if there is a way to learn about your customers, okay, the element to build loyalty could be significantly higher. Arindam said the pricing is a key part in our part of the world for sure. But I mean, the broking industry has seen pricing only come one way down in the last 8 or 9 years. It's only the guys who can keep their volumes high will be able to survive. So it's a question of scale. So I think the online growth is providing an opportunity to all of us to say, there's so much more information that you can get about your customer. You know exactly when he's logged in, when he's logged out, how much time has he stayed on your platform. And there's so much to learn from the e-commerce guys who will tell you if you bought something, somebody else like you has bought this, or if you bought this last time, this is what you can look at. I don't think the financial world is doing it as well as the e-commerce world. And then that's our take to say, learn it quickly, because somebody is obviously going to come in, and today, like you said, the entry barriers are so small. I mean, it hardly takes any fintech company in that sense to get into the broking world. So my sense is the opportunity being provided of the online world is humongous. There'll always be a large number of customers on the online and maybe an equal number of customers of offline. As long as we know how to manage both of them distinctively differently, it could be the next great opportunity for the broking business to grow over the next few years.
Absolutely, I completely agree. Dhiraj, let me now change the topic to user experience. And at ICICI Direct, we have done 2 major changes on UX. We're trying to do another. I've seen HDFC also regularly does changes, and it's almost like the whole idea is to become as simple as maybe an Uber or iPhone, where you don't really require a manual. A new customer just comes and instantly starts to transact. Having said that, the challenge with investments is that it is complex. So I wanted your thoughts on, are we going to have a simple app or a simple interface in our world, which is going to be like a Uber, or you think it's just a pipe dream?
No, I don't think so. It's a pipe dream. I think that's something we have to work towards, and all of us are working towards the same. Wherever the products are commoditized, like if you have to apply for an IPO, it's a no-brainer. You just need to know whether you want to apply, you don't want to apply, and then what numbers you want to apply. So it should be a one or few clicks process. That something can be easily worked upon, and we have done the same. So we have a 3-click IPO process. You just within 3 clicks you can apply and move on. So to the extent of which are easier, simpler, commoditized options, it's very easy and should be done. We all are working towards it. And if you look at a little bit more complex areas where customer need to really analyze a lot more information, and in our business, time advantage is the biggest advantage. So if you can get all relevant information, able to analyze that information quickly and take a quick call on the same, I think we will make the job of our customers very easy. Like, just to give you an example, when we had a negative news for PNB, now how fast you are able to disseminate that information, how fast you are able to analyze that information and translate into an actionable for your customer will help your customers. If you are, as an organization, able to assimilate everything, able to put in all information and say, look, this is the time to act in this fashion, customers will definitely look forward to it. They will take decisions, they will value it, and probably that's the way to overcome the price war also. So you have to be really, really working on these areas. I think it's doable, it's easy, but we got, as Kamlesh said, that we got to learn quickly from the Facebooks of the world or the e-commerce players. That's where I said earlier, I don't think so. We, as an organization in terms of brokerage houses, have much core competence in those areas. And that's where we are looking forward to learn and partner and collaborate with the fintechs so that we get quick solution on all these areas.
Right.
Yeah.
Arindam, there's a lot of movement, in West also. Most of the discount brokers are now moving into advice. A lot of them are actually also getting challenged by the new age robo-advisory, etc. So you think that's the way the graduation of e-broking is going to happen, or what are your thoughts on?
See, I think whether you accept or not, robo-advisory is here today, and people are accepting it in a large way. So our experience that we have the basic version of robo-advisory with our clients. So where based on their objectives and based on our analysis, we project set portfolios to them, and ultimately they decide whether to go for it or not. But we have seen clients appreciating it in a big way. They think that the system is very transparent. The system is highly weighted towards the goal that they have. So there is a genuine effort for the entire organization to reach the same place where they want to be in a couple of years' time. Now, is it all? But clients do have a lot of questions. They come back. So like anything in India, there is a hybrid model. So online is not fully online, supported by a little bit of offline environment, and they need a human interface. So in robo-advisory also, now that it is becoming slowly popular, we have seen many clients coming back and asking questions about how things have been done, how the portfolio construct been made, what are the things that we have analyzed, whether we have taken into account so many other short-term goals that the guy is having already with him. So this will evolve. It's just a beginning. Yeah. Now, at the same point in time, now as you said, advisory, how it is going to change, because there is a big, we are all waiting for SEBI to come up with their clear guidance on the advisory and the distribution model. I think that segregation, if it happens, would be a game changer. If it happens, it would be very tough for all the players to reorient themselves, but it is not impossible. If it doesn't happen, if it remains in the same group where the same promoter company or the same group company can be advisor as well as a distributor, now that makes little more things little comfortable for all of the existing players. So you can see a lot of people who are waiting for the regulations to be clear to develop a long-term model. I think that's where you see the next level of advisory coming in. Having said that, today in the retail environment, the demand from the client and expectation is just like any wealth product, right? So retail client expects same wealth kind of product, strategies, advanced advisory to be given to him. The democratization of research that has happened, that you can go and check any research report, you can see things updated. Like we cover 500 companies in our mobile app where it is updated on a weekly basis, or anytime any news comes in, immediately it gets updated. Now imagine, first of all, the number, I believe, because I am in the market for the last 25 years, it's a staggering number to review and monitor even on a weekly basis. Like it takes huge amount of resources. Secondly, are you getting the premium for that kind of a research that you are presenting to the retail client? Because ultimately retail client is subject to the pricing, and where you don't have any guarantee whether you stick around with you. So there is a genuine effort to make a big differentiation in terms of the way people deal with you. They make money. The advisory is valued by their part. And I think we'll see it evolving and maybe very fast once the guideline comes in.
Right. So Kamlesh, on to technology. I think recently I was reading that one of these big news companies, I'll not give the name, they have now the ability to actually scan news in such a way that if, for example, there's a strike which is going on in, say, a port in Hong Kong, they would be quickly be able to discount, what's the impact on various companies and, give it to their clients, etc., or the research team. So, what are the big trends in your mind, as far as AI is concerned or big data is concerned, which are impacting our industry?
I spent, I actually look, I don't know, all of us perhaps will have the same view that in spite of being head of brokerage companies, we look at our job as being more head of technology companies and broking being coincidental. And I'm sure if none of us think like this, some of us will be out of job and business. I was in China trying to look at what these guys are doing, which is significantly ahead of us. And I met the WeChat guys. WeChat is the parallel of what WhatsApp is in India. And I was amazed to see that they've built everything on their platform. On the WeChat platform, you can do your Book My Show, you can do your, it's a wallet by itself, they have a banking license, and the amount of information they have on their customers is so high. So she said that she was the head of strategy, and she was saying that we started a lending business program, and all that was required that they had financial data of the client because they have like our social security number, like our CIBIL score, they had even that number, financial standing number of their customer on WeChat. And they offered a program to offer loans to their customers. All that they required to do was to say, I want it, and that much amount of money went into their wallet. Wow. And she had the modesty to ask that in the last 2 years, we've just done a disbursement of 1 lakh crore. Do you think we've done well? And I said, 1 lakh crore is like the balance sheet size of a bank in India. So I'm saying that's where the world is moving to. We, for one, are working with, what is the reason for somebody to come to Kotak Securities or to HDFC Securities or IIFL or ICICI? It's finally your customer. But if you want a larger range of customers to come to your platform, it has to be an open architecture. It can't be about your advice and what you are asking to buy. Today on our platform, we actually make sure we have a guy who actually brings us real feed of anything that and everything that is available in the public domain in less than 10 seconds. So anything available in the public domain related to a stock actually can be fed onto a platform flat in less than 10 seconds time, which is advice shifting to information. Because what he does is he separates the good news and the bad news by putting a green and a red sign. And the customer expects you to say, on one place, if I want to know about Infosys, he expects every broking house's view on Infosys to be there on your platform. Okay? Right. So you can see how many people are saying sell, how many people are saying buy, how many people are saying hold, all analysts, all broking houses together. And that's the kind of information that is available, possible today. Okay? Right. I often keep telling people internally that, and that's an advice to all people who distribute investment products, that we should think ourselves lucky for the kind of money even we make today. Okay? For that kind of, because there will be a time where a customer won't need advisors or advice. Obviously, he'll need it in the real world. But a lot is moving in that direction. And I think what is happening in the, whatever gets published in the, in any open forum is today available in less than 10 seconds in actually one place. And I see an overdose of that. Obviously, what will happen is the better guys will be able to classify that information well. So what we try and do it is we give it in some widget form. So it's a 3x3 widget box that you can open, and you can decide what widget you want to see. So when you log in, you can see only your information. There are a lot of customers who don't want, why will robo-advisory work? Because a lot of customers finally are not happy with the push that they get from the other side who is, saying, sir, le lo, ya buy karo, because I am telling you kind of try and do that. Fortunately, a robo can't do it. Yeah. Okay, so I was looking at a demo of a robo-advisory platform, and I was surprised because she was saying everything possible a dealer can say in terms of information, including when the guy said, I want to buy Reliance, okay, as an example. And she said, are you sure you want to buy Reliance? Because I just told you that our research call on Reliance actually is to sell and not to buy. Yeah. Okay? Yeah. So if that's the amount of replacement that technology, robo or artificial intelligence can do, I think it's something that we have to first absorb, that is here to stay, and that's going to be how way of life is going to be. Yeah. Otherwise, I'm saying the fintechs will definitely take over a lot of us over a period of time.
I also personally feel that there's a lot of development happening on the automatic speech recognition and, you know, the NLPP. So it is possible that e-broking may become back to, you know, phone broking. You know, that's also one of the areas which is, you know.
So on that note, there are already people who are working on saying, you know, because sometimes it takes time to record your call, put it on a dialer and then send it out.
Right.
So obviously you say what you want to say, it gets converted and then the message can go out. The language still needs to get improved, you know, because we were testing with our robo-advisory. If somebody will say, Reliance uthale, you know, you still understand that he's saying you need to buy Reliance, because that's not what he can control in India. But we are working on that to make sure that the robo understands that that means, obviously you have to always check with the customer and say, you want me to buy Reliance. But I think that's where the world is moving to.
Yeah. Dhiraj, your thoughts on technology and, you know, AI?
So I think when we designed the online broking space, we were trying to look forward for a automation and solving the problem in terms of how we can connect the bank account and demat account and trading account and give a solution to the customer which becomes more or less paperless solution for the customer. That's what we achieved. But over the years, the only thing which were left open was that how do we receive instructions from the customer. At the end of the day, after sharing all information, research recommendations, etc., we still need instructions from the customer. How do we, and we proceed on those instructions. So first, customer walking in, sitting with the brokerage, in the brokerage houses, offices, and giving instruction in writing or right at there upfront. Later on, they moved on to the phone. Some of them are still continuing to be on phone. Then they moved on to various platforms like, you know, online trading platforms or mobile applications. And now, since they are spending more and more time on the chats, and that's where we are integrating the chat bots and ensuring that when they are at Facebook Messenger or they are on any other chat platform, we ensure that they can ask for the information, they can execute their transaction then and there only. So we are also progressing the way our customers are progressing. And we are also trying to take the instructions from the customer where in whichever form and means customer is comfortable. So tomorrow, if customer moves on more to the Alexa or some other voice-based tools, you start using Siri more often, then I think it is imperative on us to build the tools which helps us to get the instruction leveraging these tools. So we'll move on. I think that will work well for us. And where we can use actually artificial intelligence is that how do we retain the learnings about our customers at our level. Today, if only a relationship manager is engaging with the customers, the all learnings are with the relationship manager. Due to attrition, due to some other reasons, if the relationship manager moves on to some other customer, the learning remains only with the relationship manager. Now, how do you give this solution to the customer and retain the learnings of customer behavior, pattern, style of investing? Once you put all these things to machine learning, over the period of time, automatically leveraging machine learning, the system would know what exactly customer is looking at. Suppose a customer who's got a large exposure in particular stock and he or she is checking thrice a day the price of that particular stock only. So can we automate it when he is on the chat or she is on chat? We provide that information on a different interval to the customer, or there are meaningful change in that share price or price of that security, that alert can be sent to the customer. We can in fact give the facility to the customer to put the alerts on their own. So like this, we are exploring and we are using various technology. I think artificial intelligence and machine learning will help us to actually leverage on our knowledge about the customer more. And some of the tools are available. Some tools will evolve over the period of time to help us to serve our customers better.
Yeah, I completely agree. I think that also has a impact on the loyalty, you know, in branches. Again, I go back to branch banking. You know, one of the core element of having loyalty, building loyalty, is to be able to recognize customers' need proactively. So imagine the, you know, cashier saying, oh, you must have come for 20,000 rupees note and 20,000 rupees. And, you know, that ability, if we are able to do, I think it will also bring up the barriers as far as loyalty is concerned. We are open for questions if there are. Yeah.
It may be a repetitive question, but I just want to ask, there are fintech technologies or there are, brokers available online which are actually dealing in at zero brokerage. One of them I'm also using. So do you think, since you are going into an advisory front also, there's a cost to all existing brokerages, broker houses, and the guys are providing, actually the services at zero cost. Do you think it's a threat to existing broker houses? Or, if I want the information, I may just use Bloomberg or something and I'll do all the dealings over there. So do you think it's a real threat to broker houses, existing broker houses?
Kamlesh.
Is it a threat to existing broking houses? Of course, yes. Broking houses are used to the fact that, like I said, the margins have been diminishing over the last 8 or 9 years. But if you look at the top 5 broking houses today, either in terms of either revenue or in terms of the market share of the volume that is controlled, it will still not be the discount broking guys. I think there's a separate niche market, okay, which exists in every product, in every category. There would be a niche that would be existing for different sets of people. Technology allows a lot of discount broking guys to be able to price it lower. But keep in mind that there are always pluses and minuses on both sides. I don't know, I don't want to take a reference for a discount broking house, but there are issues where if you want to buy a stock, you need to have 100% cash margin available of yours with the broker before you decide to buy. And when you do that, you allow him to enjoy 2 days or 3 days float before he has to pay. So in a way, you are paying, but you don't know that you are in effect paying. The same thing with a full service broker's house. You will hopefully have some margin, not necessarily the full, but you will pay the full money after 2 days when you are due to pay, and so on and so forth. Technically, there are price points because nobody would do it free. He has a different model, and the big broking houses have a different model. So if you call their contact center, then it'll mean that you have to pay some price for the call that you have made. Technically, in the full service broking houses, you can make a call today free of cost. So there are, like I said, different models. The question that we keep looking for is there scalability and size in a discount broking model. The level of technology of a discount sum in India, and I tell you, I traveled to China and to the US only to understand whether if they were far ahead in the discount broking space as compared to India. Even today, 10 years later, the top 5 guys either in the US or the top 5 guys in China, both in terms of market share and in terms of revenue, still continue to be the full service brokers. Because remember, you're dealing with money, okay? And when you have your hard-earned money that you are putting somewhere else, you may like the fact that the brokerage is zero, but I'm sure you have more reasons to worry about the principal which is at stake. Not that I'm saying that discount broking houses will do anything wrong, but that's the mindset of an individual, okay? So you go to a Fidelity or a Charles Schwab in US, or you go to a E-Trade in US, and they are the discount broking guys. When it comes to matters of money, and you want to put your 50 lakhs or 1 crore of shares as POA or pledged with somebody, you are more careful where you're going to put it. So there is a distinct place for different sets of people, so they'll do well. But like I said, the size, whether in India or in China or in US, has remained up to a particular level, not been extremely scalable, but there are 1-2 good guys in the discount broking space who do well in every country either ways. So I don't think, I look at the guys who are doing well in India as something to learn from because their technology is their strength, and if that is what we can understand, learn and replicate, it's good for even the full service broking houses.
And I think in my experience, customers finally look at the complete value, of which price is a part of it. So, of course, there are different perspective to it. Some people will only look at pricing. Some people will look at the complete package that they're getting. And just to add to your point, for example, I will not search and see who's the cheapest doctor in Bombay to go there, because there's certain things where you really want to go, where you've seen the rigor being applied in the past.
But just to add to that, I think even in US, I think most of the time we refer to that market because there are a lot of learnings from there. If you look at US market, Charles Schwab, they do not charge on ETF. They do not charge on a lot of mutual funds. Yeah. So I think large brokers, they have adjusted to the fact that there is some give and take, right? There are certain corners where you have to adjust. There are certain things where you cannot compromise, which is the advisory quality, your product that you distribute, the kind of new innovation that you bring on the table. So it's a mix and match. I think it's not like in a way we can say, okay, this is going to happen or that is going to happen. So you will see a lot of adjustment, and this market is becoming very competitive on that side, because today, when discount broking came in, suddenly the delivery brokerage, just to give you an example, it was hovering, let's say, around 10 paisa, 15 paisa. It crashed down to 5 paisa, 4 paisa, right? A lot of large clients of ours also came to that level and said, are you ready to negotiate, right? We sat one-on-one. At some point in time, the customer they themselves say, see, I don't think it will become feasible for you beyond 5 paisa to give service to me, because you are giving me research, you are giving me an analyst on call, you are giving me a RM, and on demand, whatever I'm asking, you are providing it to me. So there is also a reasonable element setting in from the large traders or seasoned players, where they know what is possible, what is not possible. So I think, just adding to what Kamlesh has said, that it's a niche market, it's a segment of market, but the entire spectrum would have space for everybody, and I think large brokers will adjust to it.
Any more questions? Yeah.
Hi, I have just one question, short question for Arindam, Dhiraj, and Kamlesh. Arindam, you think it is possible to maintain a traditional offline RM-based model and a discount brokerage model under the same umbrella? Because you guys, I mean, under Prakarsh, you guys have started a different brand name, so that probably doesn't eat into your, your parent brand. So is it possible to have both the brands under one? This is for you. This is for you, Kamlesh. In the year 2000, if you remember, we started Kotak Street. That was like a discount brokerage model, kind of an online model, far ahead of its time. And I think probably it was started at that point of time because we believe that you can't have two models, the online model and the traditional model. But somewhere down the line, you guys decided to only move to the Kotak brand and moved out of the online brand. So do you think it's the right time to restart? Because Arindam has started another brand so that it doesn't eat into the parent brand. Okay, so that's, and Dhiraj, a question for you is that, you say in India, I don't know about, I mean, Mr. Mathur shortly did refer to it. I wouldn't like to fly in an airplane which doesn't have a pilot. It should have an autopilot, I know, but it should have a pilot. I wouldn't like to go to a doctor where the surgery is done only on the computer and a surgeon is not there. So talking about a pure online model, pure machine-based, AI-based, and a robo-advisory without a person being involved, do you think it will really work in the Indian context? Because an Indian consumer, typically likes to have an interaction. So Arindam, Kamlesh, and Dhiraj, that's it. Thank you.
Right. So I think 5 Paisa is a completely separate company. It has nothing to do with India Infoline. So like we are going through a restructuring process, as you know, it's in public domain. So India Infoline, the core broking company, is becoming IIFL Securities, and 5 Paisa is a completely different company. They are focusing into a segment, which is a discount broking segment. So the idea is that, like all the segment, as I was telling in the last point, all the segments of the broking market will grow. And there is also a segment, which is a discount broking segment, where all that you have to provide is technology, and you have to provide execution service. There is no recommendations, there is no advisory, there is no other services which actually keeps your cost very high, and then you have a profitability problem. So that particular game has started. It's only a 2.5-year-old game. But I think long term, it would have its own course that it will run through. But there is no conflict. I mean, in our case, we didn't find a single client who's complaining about it, because the packages are completely different. So if you want research, if you want an analyst call, if you want to meet up some senior person on a particular company that we are covering, these all won't be possible in a 5 Paisa, right? So if you have to build a strong portfolio, you're investing around 1 crore rupees or maybe 50 lakhs, 10 lakhs, whatever it could be, depending on your outlook. These are two separate games. So I think there is no conflict, and there could be opportunity as well.
Yeah, I mean, Kotak Street started with the Kotak name. It was supposed to be an online site. over the years we have realized that it takes time to build one name and one brand. Okay? So if 30-40% of the Indian population can remember Kotak name first, I think that's, we would have partially succeeded in our endeavors. So I think we realized as we grow, it's only one name that we'll kind of try and build. And your question whether do you want to do something else or you want to try and bring it back again, I think it's more a product that you need to bring in if you want to at some point of time. So on the online platform, the name will continue to always remain the same because we are committed to just building one name called Kotak.
So I think what customers are looking at, they are looking at multi-channel experience. They are looking at omni-channel experience. So it's not that you need to have float separate companies, separate subsidiaries. You can service different segment of customers by servicing them differently. And pricing can be different for different set of customers. There's no one-size-fit solution which can serve all the customers. So if there is a customer who's looking at to use only your platform to execute the orders and no other services, they can be serviced at a different pricing. And those customers who are really looking at a value add, they can be serviced at different prices. So those kind of models, products are available. I think we'll all evolve. We'll all look forward to serve our customer differently.
But just to add to it, if you can take a cue from what is happening in the US, a lot of online robo-advisors started off, but they realized that there is an element, you need to launch a hybrid kind of a mechanism where there's a fallback available. So clearly, that's a learning which is coming from there. Any other questions?
Is technology leading to more trading? Because I'm told by one of the CEOs of one of our exchanges that India is the most speculative market after Korea. So is proliferation to technology, this whole, everybody's looking at gamification, appification of various services. Is that going to lead to more trigger-happy traders than investors? And is that a good thing?
So let me just take a cue on that. I think eventually there's a mean reversion which happens. So, at times people do get excited, but they realize that, look, so just to say that because, let me give you an example. When we got a Wii, Nintendo's Wii game at home, everybody was after it. We are playing, left, right, center every day, morning, evening. But we realized that now it has a place. So in the same way, we've seen that customers do get excited, but they realize that this is not the way it is. And really to blame it on the fact that it is available is not the right thing, I would say, not the right conclusion.
I wasn't blaming. I want Arindam to actually answer this question because, when you've launched, I'm told that, the maximum volumes that you see is from a city like Ranchi on your app. Now that's very interesting because typically, distribution finds it very hard to reach other services, bank branches included. Find it difficult to reach these parts of the country, so to speak. But highest volumes from Ranchi, could you decode that, Arindam, please?
See, normally what happens, I think this volume data, this is very relative. I mean, when Ranchi volume you are looking at, it is compared to those set of cities, right? The Ranchi and the similar category of cities. So we see spikes happening. I think some of the time people come, speculators come, they put a large bet. Over a period of time, the trading happens. And as he said that the sanity prevails over a period of time. They realize that not every day you can come and make money by speculation. But overall, if you look at the growth, I'll give you a statistics. The cash market share for the top 5 brokers has grown from around 13% to whatever it was in 2013 to 18%. In NSE, right? Which is a significant move. So the clients who are coming, there is also movement towards cash market, investment. It is not that only trading that is happening. Coming to the gamification point, yes, it's an opportunity. Market, everybody comes to take an opportunity. But ultimately, you have to take your call. I mean, just by knowing the similar profile, people have bought certain stocks which are into metal sectors. I mean, then you have to look at it. And that's where I think the artificial intelligence, your layered advisory will come into play. So we have a concept where we do dormancy analysis, right? when an account becomes dormant. Why an account will become dormant? If you make loss only, then only it will become dormant, or maybe some other reason. So let's say first assumption that you have made loss and you have become a dormant. So we do an analysis called dormancy analysis, where we look at the spikes, and then we look at both profit and loss for the same client over a period of time, and we try to connect to that client. So I think there is a way that people are trying to address this issue, that based on your profile, if you are an investor and suddenly you got attracted towards the return and you are playing the wrong game, there is a mode of correction that happens. But ultimately, market has to decide its place. I mean, you cannot just control it.
I'm sorry, I'm not sure if I want to leave a panel of e-broking with that question that you have in your mind, because even today, after market volumes couldn't have been better than what they were in January, and even at that point in time, I think 70% of the volume which happens in the market is offline and 30% is online. So that's the broad distribution of the market. Between the two markets, in the offline market, there's somebody who can push you, and the online market, there's nobody who can push you, technically. Okay? So if you want to have share of blame, I'm just saying you should have lesser on the online as compared to the offline. It's like saying, I read lots of stuff where people are now saying that because of online purchases, I believe people, the doctors of the world have coined a disease that you have of doing extra online purchase, and there is some medication process for that. But the big difference between that and here is about money. Okay, so when you are basically looking at investing your own money, okay, and I know for a fact for all the people who are either traders or investors, they find the online medium far less intimidating, far less pushy, nobody breathing down your neck. So if any, I think the medium on the platform is far easier. I can't blame those set of people, because gambling is not official in India, or you can't bet on, so if there could be some set of people who would use the medium for a different kind of a high, which happens more in the derivative market as compared to in the cash market. But the fact that on the online market there is no push at all, I mean, you just have information and you decide on your own. There is no room for fact that, will it go up? For example, I can tell you that the biggest trading market is actually Indore and not necessarily Bombay, and that has nothing to do with technology. It's the nature of the market in Indore versus the next one would be in Rajkot and Baroda, and then maybe you would get into Bombay and Delhi from that perspective. So I'm not very sure the technology plays a role in terms of doing that. I think it's the innate nature of the respective market, and just that hopefully technology helps in bringing it down because there is no push in that entire platform.
So Kamlesh has aptly covered what I wanted to say, that the excess of information or excess of channels does not lead to a speculation. It's inherent in the nature. If you want to speculate, if you want to participate in the market, you want to trade, you will find out the way.
Right. Thank you very much. I think, internet, broking, AI, this is a marriage made in heaven. I think, there's only one way to go, and especially with, what you were saying, there's just about 4.5% I was reading of population which actually invest into equity markets as compared to something like 48 or something, if I remember, in the US. So there's a huge market for all the players, and I think, best is yet to come, I would say. Thank you very much.